Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, May 22nd, 2020. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss. This is the last pre-market video that I will push out here before the Memorial holiday weekend. It's going to be an extended holiday weekend with the markets coming back the following Tuesday. So right now, what you see is we've had an overnight flush where price pushed down through the previous session's low, the previous 2 and 3 day lows, and is now back up. This looks very, very bullish in one sense. What I mean by that is you have a very narrow 3-day range that is developed. You can see it here. This was over the last 3 days here. You have this narrow 3-day range. You also have this 3-day narrow range that's developing right now as well. But the one that is already cemented in is these three. And we've just taken out those 3-day lows and are jumping back up. That could lead to a slingshot rally here to the upside over the course of the next 3 days. From this low, you could slingshot higher to about 30.50 to 30.65. We're looking at about a 165-point move from this pivot low. So if this remains bullish, if today remains bullish and closes above today's midpoint, then from the 2900 low here, you could forecast 150, 165 points higher. That gets you 30.50 to 30.65. Now, one thing to keep in mind is the ES is testing a major level here. It's 29.47. It's a key level from before here, 29.47. And for the most part, this high here, failing to get above that high here, could then lead to a test back toward 2900. If there's any failure through 2900, it opens the door to 2750 to 2760. So that's the key level to watch, 2900 on the downside here. If this can continue to hold bullish today, we could forecast off this low and jump toward 3050 ahead. All right, let's take a look here at the NQ. The NQ also seeing a pullback here again. One thing I want to make clear is look at this uptrending market, right? Very bullish uptrending market. This yellow or gold line here, that one is the 8-period pivot-based EMA. I call it the 8 PIMA. This right here is the last 55. You see the 21 coming across and then the lower 34. So once they start to all cross over here, you have the 8, 21, 34, 55. And ideally, in a bullish trending market here, you want to look to defend the pullback zone here, which I call the PIMA trigger zone, between the 8 and the 21. And pulls back into that zone, optimal buy the dip for a new high. That's typically how this market has played out here recently. And right now, that's the first test into the 8 period. There's tended to be about 2 to 3 days of tests before you see the next rotation higher. Perhaps that could still be the case. What I would continue to watch today is the previous session's low. We're right at it now. Price took out 3-day lows as well. We have also a 3-day narrow range here. So from this low here, around 92.25s, you can forecast higher about 500 points. Call it 475 to 500. 492 is on the indicator here. And if price rallies here off that low, it could be pretty tremendous. Maybe we need another day or two lower, but 9200 is the key level to continue to watch. Shouldn't get below 9200 in this bullish scenario, or 9150 perhaps for a continuation higher. So again, we're in that zone here where buying the dip could lead to another rotation higher. All right, let's take a look now at crude oil. Now, crude oil is also rotating higher off of the PIMA trigger zone. You can see right here we had a test down overnight, a big sharp sell-off down into 30.74. 30.74 filling and bouncing, actually got to 30.72. 30.74 is a key level here based off of this key range. Bouncing off of that level and rallying here back above the midpoint of the day. This currently is 32.36. And so once we got that major expansion from the 7-day range, I mentioned 35s were the next upside target. We almost got there. Now we've pulled back into the PIMA trigger zone. We're showing a 3-day failed new low. This could lead to another push higher. How much higher can it go? Perhaps the upside target here to strive for somewhere in the 38 to 40 zone off of this pullback low. So right now, again, failed low in the Pima trigger zone, taking out multiple day lows and bouncing back up. If price can continue to hold above 32s moving forward, perhaps that opens the door to 38 to 40 ahead. All right, let's take a look now at gold futures. Now gold futures here has pulled back from the highs. You'll notice here we have a really great trading range that is developed here, basically from 1775, 1760 down to 1670 or so. Right, it's a 100 handle range. We had this outside day, we had price here with the failed high, and then we had a continuation lower. Down day yesterday here and a pullback today, but everything is still rotating lower here overall off of this strong outside day high, which occurred right at major resistance here. So all of this suggests more downside. Yesterday I mentioned that 1730 was going to be an important level to, here that would be tested and a likely break through that level. There it is. It broke down and went to 1715. Now we're back above that zone, and 1740 to 1745 providing resistance. Failure to get through that zone may provide the optimum opportunity to sell it for a continuation back to this blue dot below. That level right there is the previous month's close price and is 1693.10. All right, that is it for now. We will see how this plays out the rest of the session. Have a fantastic extended holiday weekend. Please like, share, and subscribe, and I will see you all in the trading room. Take care. See you soon.